I actually wasn't that surprised by the stat. I'm not happy about the stat, but I'm not surprised by it.
Hello, everyone. Today we're going to be talking about the identity shift, moving from saver to investor. And I'm joined by my two colleagues, Nicole and Lindsay. They're going to share their experiences and insights with us today. And actually, I'm going to start with a stat that I think is pretty interesting. I would love your take on it. The stat is women often identify as savers first, and only 61% of female clients see themselves as investors. This compares to 76% of men. That surprises me a bit, but why do we think women often identify as savers first? Lindsay, I'll go to you. Does that surprise you? Why do women see themselves as savers?
Yes, thanks, Maddie. And that stat really resonated with me and many women I know, I'm sure. In my 20s, I would not have described myself as an investor, partly because I didn't know what I was doing, and also I didn't have the confidence to move away and beyond saving. But later I realized that actually investing is a really important part of our future financial planning, and you don't have to do it yourself.
Exactly. There's a lot of options. How did the stat sit with you, Nicole?
Yeah, I actually wasn't that surprised by the stat. I'm not happy about the stat, but I'm not surprised by it. I think that in general, women tend to be a little bit more conservative in where they place their hard earned money. And knowing that your money is in something like a cash savings account feels safe. It makes you feel like you have control and confidence in where your money is. You know where it sits and you know what it can potentially do for you. If you're not in the world of the financial services industry and not even just the financial services industry, if you're not in the investment specific world, this can all feel really daunting and it can feel very foreign. And if you don't know something, you don't necessarily want to put your money into it.
Exactly. So there's a bit of a gap there that we're talking about between different types of investors, or men and females. And as you say, maybe their comfort level in investing, building that confidence and feeling empowered. Would love to flash back to your journeys. Think about yourself, say 5, 10 years ago. Did you always see yourself as an investor? And if not, what changed your mindset?
Yeah, I can start. I'll say that ever since I started working, I think I've seen myself as an investor, but how I've seen myself as an investor has changed. So let me go into that a little bit more. I would say in the first couple of years of my career, I would have seen myself as a quote unquote passive investor. I had an employer sponsored pension plan. I also had an individual investment account. But candidly, the amount that I monitored that account, really knew what was going on in it, was quite shallow. And at this point in time, I was working in a department that was very product and investment focused. And so a lot of my male colleagues were talking a lot about where they were looking to put their cash and their savings, whether it be in their pension account or their savings or their investment account. And that was something that I wasn't having conversations with them on. But I had to think to myself and say, I'm actually in a position that not many women are, where I'm actually in a very investment and product focused role. I actually do have the acumen and the insight to potentially make some decisions on where I want to put my investments and then think about whether they're the right ones to actually achieve the things that I'm looking to achieve as I think about different milestones in my life.
Those are really helpful insights. And I think I do want to just point out, as a woman in finance, it was hard for you even to take the leap into starting as an investor. So definitely, I think, a really normal experience for people to have, especially if you're in other fields or other industries. Lindsay, what about you? Were you always an investor?
Absolutely not, Maddie. Even when I got my first workplace pension, I wouldn't have considered myself as an investor, even though technically I actually was. I'm quite risk averse, so the thought of stock picking is really quite daunting. And that moment for me, what really changed my mind about investing was the fact that I could ask somebody else to manage my product investments for me. And it would be managed by a team of experts that would take away the stress of having to analyze companies or the worry of losing everything. So I think it's having that courage to take that first step. And honestly, I just wish I started investing much sooner.
Yes, that's a theme we hear a lot, right? Taking the leap just a little bit earlier because that can accumulate and grow over time. And like you mentioned, there's a lot of different options that make it really accessible for someone just starting out in investing. I want to step back just a moment and reframe a little bit what we're hearing. So, I'm hearing that it might be easier or feel more safe for cash investing as a starting point. I want to reframe that actually as, investing beyond cash is actually an extension of security. Lindsay, what do you think about that statement? Does it resonate with you?
It does. And I think a big part of reframing is helping people see that saving, an extension of saving is investing for your long term future. And as a business, we know it's our responsibility to look at these risk warnings, such as capital at risk, which can be quite daunting, and make them more balanced. Yes, there is a risk in investing, but there's also a risk in not investing when we think about inflation and the cost of living over time. I think it's also really important for women to see that protecting their future is such an important thing, and it shouldn't be seen as like a scary or separate thing. It's an evolution from saving.
Exactly. I love those points. Nicole, what do you think? How would you add to that?
Yeah, I would agree with you, Lindsay. I think that savings is an evolution or investing is an evolution of savings. I think about investing like savings 2.0, right? And so we encourage for investors to have a cash savings account because it is important. You never know what rainy day funds you might need for today, the next month. But as you're thinking about longer term periods of time, the intermediate term and the longer term events that you'd like to have happen in your life, that same amount of money might not be able to cover the things that you would like it to cover as you think about wanting to achieve those objectives. So, investing should be seen as something that's going to help you and help those hard earned pounds that you've actually saved and made sure to allocate to the side work hard for you so that when you do reach those different milestones in life, you have the ability to actually enjoy them. And doing that is really helpful as you're thinking about, let's say, looking at potentially buying a home. If I had, let's say, £2,000 in a cash savings account, and I said, in 10 years' time, I want to be a homeowner, but I don't know what's going to happen with interest rates or any other type of market or economic development, that £2,000 that I might be saving for a house deposit may not get me to actually becoming a homeowner. Whereas if I put it in a smart investment account, I might actually be able to be in a managed portfolio solution that is going to make sure that my money grows and allows for me to achieve that really big goal.
Exactly. There's people have all different types of goals. You mentioned a house, maybe it's a wedding, maybe it's that longer term goal of retirement. But investing beyond cash can help you reach those goals even sooner. Nicole, I'm going to stick with you. And there's a lot of noise out there around all the different products in the UK marketplace. There's a lot of breath out there. How do we sort through that noise? How do we think about the different choices on offer for investors here in the UK?
There's certainly a lot to consider. And I think that when someone who is new to investing thinks of investing, they might think about what stocks do I need to purchase? What specific fund do I need to purchase? And they forget about the fact that really, when it comes to investing, the question that you should be asking yourself first is, what am I looking to achieve? What am I looking to achieve over the short term? Or what am I looking to achieve over a longer term period of time? And that question, however you choose to answer it, can lead you to two specific types of accounts. And that's really where you should start. So, if you're looking to maybe save for a short to intermediate term investment objective, it might make sense for you to open up an ISA, which is an individual savings account. That's money that you can put aside in a potentially managed portfolio solution that will allow for you to achieve the returns and the income that you might need to achieve some of those financial goals that you have for yourself within the next, let's say, 0 to 5 to 10 years. However, if you're looking for some financial goals that are more aligned towards making sure that you or myself are best suited to be able to live the life that we want to live when we get closer to the age of retirement, you might want to actually open up a SIP account, which is a self invested pension plan, which might allow for you to be able to put something of a buffer into your ability to have more income as you think about what your pension plan, maybe through work or the state, is offering you. And so thinking about those goals through those different types of lenses, through those different types of time frames can allow for you to decide what type of account you might want. And that's where Vanguard's wonderful solutions of a managed portfolio come into play in a really, really helpful manner. You can provide a certain percentage of your cash savings account into one of these managed portfolio solutions that Vanguard offers and allow for them to do the work with their 5 decades of managing money for people who may only have 200 pounds to the people who have 2 million pounds to achieve that same long term goal. And so you can have trust in the fact that Vanguard is going to steward those funds and act with the highest level of fiduciary responsibility in making sure that your money is growing and is being managed in the way that you need it to be managed.
The hardest part is normally starting or taking that step confidently into investing. Sounds like there's a lot of choices here that can help people who feel that maybe investing isn't for them. And I think what we would say to them is, yes, it is. And we have different tools that can help you. Lindsay, what would you add to Nicole's comments?
I would just add that there's definitely a lot of products out there, and it's reassuring and refreshing to know that the government and the industry are really they're making a lot of effort in terms of education and financial literacy and helping make that journey from saving to investing much more accessible and helping normalize investing so it becomes an everyday norm.
Exactly. That's what we want, right? For it to become that everyday norm. I have one final question for you all today. And I want to go back actually just full circle to the stat that we started at the top. And that told us, women are saying saving feels a little bit more comfortable maybe than that saving 2.0, investing. Lindsay, what would a world look like in which more women feel empowered to invest?
Thanks, Maddie. So I think it's all about giving women the confidence and the options to choose what feels right for them. And that's what attracted me to Vanguard's managed ISA. It was just so easy to do. And the app is so helpful. You can go in and you can look at your returns over time. It's just really helpful. But going back to your original question, for me, walking into a coffee shop and hearing conversations about women that are investing and they're talking about their financial future and all the different products that they're investing and the ones that Nicole has mentioned as well, that for me would be what the future looks like.
Love that, Nicole. What do you think?
I think that I agree with everything that Lindsay has just said. I would say that in addition to that, I think that as women begin to build their confidence as investors, I look forward to them leaning on some of the resources that Vanguard offers, not just through our app, but also through other resources. We offer a lot of thought leadership for investors to better educate themselves so that perhaps one day as they're looking at investments that they've made in some of our managed product, they come to the realization that I came to when I first started working that actually, I do know enough to think about maybe self-directing some of my money into specific investments. And I think that's one of the wonderful things about Vanguard is that we look to democratize the knowledge of investing for every investor that's looking to potentially get into the financial markets.
I love that. Love the insights. I think we all started as investors who maybe would classify ourselves more as savers and then grew into the investors that we are today. I will leave it there for the conversation, but thank you both so much for the time and stay tuned for part 3 that's coming up, where we'll talk a bit more about key topics within the financial industry. You'll hear from some more colleagues and we're looking forward to seeing you then.